For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware your risk in trading is substantial. Please make sure you are aware of all your risks prior to placing any trades. Also note, in this presentation, we cover hypothetical computer-simulated trades and results to believe is accurately represented as possible. Keep in mind, live results can vary from similar results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, wealth, and success coach with Locke in Your Success LLC, where myself and my team of mentors are here to help you win in the market and in life as well. And today I'm here to show you an example of what we call professional style income trading. It is where you can increase your returns and consistency through trading income trades with the flow of the market and utilizing some trader subjectivity with high probability trading structures. This allows us to trade with flexibility and adaptability, and ultimately helps us make more money with less work and fewer adjustments. So if you find you like this type of trading, please make sure you like and share our video. Also, come on over to lockeinyoursuccess.com. That's LOCKE in yoursuccess.com, and check out our Pro membership, where we teach and review and cover these types of trades real time in our Pro membership. So the risk parameters for the trade cycle that we're covering is we're going to have a maximum trade size of $15,000. We are going to have anticipated return of about 33% of that, or $5,000. Our potential return is going to be up to 100%, or $15,000. And our exit loss trigger is going to run at $2,500. Notice we have a risk-reward structure of anticipated return of $5,000 with a exit loss trigger of about $2,500. That means our anticipated return is about twice our risk in that perspective, and a potential return of up to $15,000, which is much, much more than our $2,500 risk. And it's about 100% of our maximum trade size. Should the trade reach that type of size, we will start with a small position and see where that goes. Our trade structure is going to be what we call a super bear entry with an anticipated broken wing butterfly conversion. Also is going to have an offset of a shorter term Super Bowl. So this is kind of an active trade, but it's kind of designed for a time period when we're not sure what's going on in the market. Let me show you the trade and let me explain. So here's the setup that I have in the marketplace. Now, the good thing about technical analysis is there's times or periods of times where the certain types of price movements are highly probable. But we also have to be aware that there are certain periods of time where the probabilities of price moving in a certain direction or a certain magnitude isn't really as probable as we would like. So this is one of those conditions where I'm looking at the charts here. We just had a really large down move in a short period of time, and we had a very sharp recovery, and we're starting to back off of that with a larger than normal candle. And when we do that, our expectations are that this is probably going to follow through and come down. I'm aware that I'm in the context of a bullish market, so I'm eventually expecting this I'm not expecting it to necessarily retest the bottom, but maybe retest half the zone here, or at least a third, I would say. Yeah, but I'm not quite sure it's going to go right down to that level. In other words, the probabilities aren't like super high. Realistically, had this came up at this speed into this swing high, I would be just short the market for a short-term reversal trade. And then once that bounce played out, or once that pullback played out, I'd be back long in the market again. That would be my normal thing, but this move's kind of already happened. I think it's going to follow through. I'm not really sure, but I want to play that if it does. So how do I play that how do I play a price move like that when I'm really not sure where the market's going? And what I chose to do here is a super bear with a short-term Super Bowl. So I'm going to pull this off, and this is going to represent, or the green line here is going to represent the T+0 line without any kind of hedging action on it. So if I'm right here and the market goes down, or in other words, if I believe there's a really high probability of the market going down, I'm just going to position like we have in the green here. And if I look at the other options, let's see if we can find them over here. So what I'm doing, or a lot of times what I'll do is if I'm fairly certain the market's going to be coming down, it's going to be a relatively large move, I might do something like this. I'm going to take a $3,400 risk for a $6,500 potential profit, and we're going to do some out of the money bearish vertical here. And like I said, when the market comes down, and we get up money, we can start adjusting from there or so forth. But that's normally what I'm going to do. When I'm uncertain, I might do something like this, where I come in and I add in a short-term bullish vertical. There are downsides to doing this, but one of the upsides is if I get my big down move, I'm not really concerned about my risk in here. If the market decides it wants to bounce half that candle, which would be fairly normal, in other words, for it to bounce up a little bit here, then I can scalp this short-term vertical and I can move it around to help with the idea that I'm helping offset my losses while I'm waiting for the market to come down. And then, of course, if we break certain technical levels to the upside, we're just out. So realistically, in this whole thing, my realistic upside risk here is maybe $600, $700, $800. And if this thing happens to fall apart off of this, then, we could be getting, $3,000, $4,000 fairly easily. Okay, so that's how we're starting out. And from there, new pricing information is going to come into the marketplace. It might change our opinion and so forth. We'll talk about that as we go along, but we'll kind of see how this works out. So this is a fairly active trade, like I said, but we'll go through adjustment by adjustment. I'm going to go to, so it's August 22nd. We're in the September 20th cycle in our long cycle, and we're in the August 27th cycle in our short cycle. Of course, this cycle is going to decay much faster than the other one. So I'm just going to go to our next adjustment, which is going to come the very next day. We happen to get a considerable bounce the next day. And this is fairly normal price movement, even if we're going down, right? So what'll happen is we'll pull back and we'll get a bounce and try and retest the top of this candle. So I was careful when I selected where my short and long strikes, where I wanted them to be. I wanted my short strikes to be near the top of this candle, not the top of it, but probably like half to 3/4 of the way up the candle. So that's what ended up happening here. We ended up getting a big bounce, and this is where we end up. So that being the case, this vertical did its job at offsetting things. So I want to treat it like a hot potato and get rid of it. So I'm going to close that, and I moved into a smaller vertical. I took this off, and I moved it up to only a 10-point wide vertical, 56.40 and 56.50. Again, I sort of purposefully choose my short strikes as to where I think the market's going to land if it goes up. And if the thing decides it wants to come back down and fall apart, that's wonderful. So here we are. Let's go to next adjustment. So the weekend goes by. Nothing really happens. This is my more problematic scenario. The market just kind of falls flat on me, but as you can see, I'm kind of holding this near the highs of that other candle with just a small amount of risk. That's Monday. I'm at 1 day to expiration. I need a little bit more time in the short-term vertical, so I'm going to move it. And I moved it to this here, right? And I believe I'm in the same strikes, I gave myself a little bit more time. If we go to the following day, we just kind of sit there. We go to the following day. What happens here is we got a bit of a down move. So I lost this vertical completely, right? I had total loss in that vertical, but that's offset by the move that we got here. So now this is up $520. Now this vertical is basically too far away from the market at 1 day to expiration to be effective. So I'm going to move it. and I'm going to move it to here. I moved it out to about 6 days. That's what I like, 4 to 6 days, 4 to 8 days usually on that short term. And I went ahead and did that. I moved that a little bit closer to the money, so now it's within reach if the market decides to reverse, and that shouldn't be a big deal. Like I said, I'm waiting for this thing to break down. This is what's come into the market for pricing information. Okay, we got the bounce. We didn't break out higher. Had we broken out higher, that might be a reason for me to exit that bear vertical, right? That's the technical reason telling me, hey, particularly if we broke this swing high here, it's basically telling me, hey, the market's going up, I was wrong. And I could exit this at maybe a break even, maybe a small gain, maybe a small loss. So it's the worst case scenario isn't that bad is what I'm saying. Anyway, this is what we end up here. I go the following day. Nothing there. Go the following day. We get a up move. You can see that this vertical is completely in the money now. So I've made that. I want to get rid of that. And I want to move this vertical higher. Like I said, if the market continues to go up, I want to be able to scalp out of this maybe at a small loss if I break my resistance level. So I'm going to move over to here. Gave myself 6 days again, put my short strike at 56.40. We'll see how this plays out. And then finally, what happens is we get that down move. We get this nice 118-point down move. We're up $1,700. This is what we look like on the price chart. Now, as we kind of outlined this trade in the beginning, my thought was we would get some sort of a down move into a support level, and then we're going to bounce. I have a support level that is expected to hold right around where I am now. And I also have another support level down in here where this other gap range is, right? So we have a gap in the market here. We have another gap in the market here. So right in here is another support range. So I want to be long here, and I also want to be long here, basically. But I don't really know if it's going to continue down to that next level or what it's going to do. So I am concerned that we're going to get a bounce here. The market took a lot longer to break down than I thought. So even though we had a big down day, I'm thinking we're probably going up. So what I ended up doing here is I flipped out of this call here, call vertical, and I also flipped out of these other verticals that were in this cycle here. I also got rid of these. Again, I'm past my short strikes here on my verticals to the downside. I'm going to get rid of those. What I'm doing is I'm flipping this into a bullish broken wing butterfly. So if I show the trade, this is where we end up. I basically got rid of the short-term bullish verticals, and I sold 5 and 5, and I bought 5 there, right? So I put a bullish vertical on it. And now I'm in a sort of a complex broken wing butterfly where if this thing reverses to the upside, now I'm going to make like $3,500, which isn't bad considering the type of risk I had. And then to my other side, if this thing completely fails out on me, it's not that big of a deal either. It's 1,500. Now what happened here, unfortunately, is the market kept going down. So if we go to the following day, we went down some more, but that's okay. We're just being patient. We go to the following day. We are here. Let's just go to the following day now. And now this is what happens in the price chart. We get another breakdown, and we get down into an area that I still believe, like in this whole area here, is a pretty hard support level if you understand technicals. And I'm still bullish off of this level. So what I decided to do here is I decided to flip this just into a straight bullish vertical. So you can see when we do this, I went from here where I got rid, or I bought back 5 of these. I sold these, and I moved that to a 10-point wide Super Bowl position in the market. Now let's talk about this. I break support, I can exit probably at a small loss, $500 or $600. Remember, I had a $2,500 risk in the trade. Realistically, if I maintain my bullish posture, even if the market goes down, I can let this draw down completely so long as I think that the market's going to come back in the next so many, whatever I have left in the trade, right? So I could treat that one of two ways. My plan essentially here was to, if I was wrong, I'm increasing my risk to the downside a little bit, but I'm increasing my profits a lot to the upside should this reverse. So that being the case, I want to play this to the bull side. So I'm basically doubling down on the bull position, but I'm doing it in a responsible way where if this continues to go down, it's just a minor loss and it's not a big deal. And I still have a lot of money that I can make. So we do this. And from there, this time we bounce. The chart, we bounce this day. I'm not necessarily out of the woods here. A bullish bounce to half candle is still, in a sense, considered a dead cat bounce when we get technically when we get a bounce like that. But we're just going to be patient and see how this plays out. We continue up. Let's go to Wednesday here. We continue up. So this is what's going on, right? We're getting our bullish bounce on the market. What's our expectation here, by the way, for the bounce? Well, the last time this happened, and we got the bounce, it came up close to swing high. This is pretty much what we're expecting here. We're expecting it to come up close to swing high. So I'm going to give this a little bit of time to see if it looks like it wants to do that. Okay, we get another 40 points here. So now it's Friday the 13th, our lucky day here, and we're getting close to that swing high number. My thought is the same as it was back here. Like if I were to draw a trend line from here to where we are now, I'm just about at that trend line. And the market's been reacting negatively off that. So that being the case, I don't really want to hold this position here. There's other things I could do. Could roll this up and put this in a smaller Super Bowl position where I risk a little and think the market's going up. I could do that. Or if I do think it's going down probably in the next 7 days, which is what I actually thought here, that we might react negatively off of this, you can switch this and flip this into a super bear trade. And if the market happens to come down over the next few days, then we can make our $9,400. But if it reverses or doesn't do that, then we have a little bit of loss there, right? I have to be careful because I'm coming into expiration, so I want to be aware of that. But my thought is that we may come up into this 56.40, and then we're probably going to back off. So that's what I'm playing this for. If I go into Monday, nothing happens, right? Darn. I have 4 days left. I'm just going to ignore trades here. If I go into the following day, really nothing happens. I have 3 days left. I go into the following day, nothing really happens. Right? We're just going into this sideways range, and essentially I am out of time at this point. Right? I only have 1 or 2 trading days left that I could trade this, and the market's not doing what I thought it was going to do. If I wasn't running out of time, I'd give it more time for it to happen like I did when I entered the trade. But realistically, the fact that I'm out of time, I'm just going to exit this trade. And I did this earlier in the day, and I did it at like a 50. Let's see, the profit number on this was 56.65 when this was actually exited. So this gives us a profit of $5,665. Now, the wonderful thing about this is my total capital that I ever had exposed to risk in the trade wasn't $15,000. It was actually $5,226. That makes for approximately 108% gain on our actual capital in only 27 days. And that's at a time when the market really didn't do as we expected. But if we understand how to manage our positions in a responsible way, we can very effectively make 100% return on a fairly regular basis in the markets, even when things go wrong. And that is why I love the training that we have in our pro membership, because when you can master this type of trading, you can make a lot of money. If this type of trading excites you as well, I invite you to come on over to lockeinyoursuccess.com. That's LOCKE inyoursuccess.com, and make sure you check out our pro membership where you can learn to analyze the market and create strategies such as these so that you can become an extremely effective trader. Also, make sure you come on over to thewinningtrade.com. That's thewinningtrade.com. There you can learn about upcoming winning trade presentations, explore past winning trade presentations, and also receive access to free bonus material. And while you're there, be sure to check out our free trading performance podcast, where you can learn to skyrocket your trading regardless of the type of trading you do. Any questions, comments, or anything you'd like to share, please feel free to comment on the video below. I answer comments and suggestions personally. Thank you for joining me, and I look forward to seeing you on the next Winning Trade.